Hi, everyone, and welcome and greetings. It's wonderful to be at this first ever summit, and exciting to see the turnout here. And I will say I'm thrilled to be a member of the FTA Advisory Board. And we have a panel that I think you're going to really enjoy, talking about open banking. And open banking in the United States is like hardly even a thing. It's something that we haven't spent years talking about, unlike in other parts of the world, where it's a very well-developed concept, but it's crucial to the future and the well-being of consumer finance. So I'm going to ask you, Meredith, to set the stage for us, talk about why consumer access to data is so important, how it's going to impact the financial landscape, and then give us the first sense of what the policy responses need to be.
Sure. Well, consumer data is just like, and consumer kind of interaction in the world is just like everything else in financial services. It's just like it is in every other part of the world. So everywhere people want things to be fast, easy. They want things that are personalized. They want things that serve their needs. That's what's happened, and we see it in all the apps that we use. The same is true in financial services. Right now, 8 in 10 people in the United States use Fintech apps in order to handle their financial needs. That's the kind of thing that shows that there's like a strong consumer demand for being able to use technology to manage this part of their lives. And what's happened in the United States is that, we've, through statute and through kind of businesses and innovation, we've begun to see that there is like this incredible promise to provide these services directly to consumers in ways that are accessible, are fast, expand access. Ooh. So, see, it's very exciting. And I think, I think you also asked a little bit about like, what are the policy issues? The policy issue, the core policy issue is, who controls the data? And we've talked about that a lot this morning at this conference, is that, it's really the consumer who should be able to make decisions about how their data is being used. And that's like the fundamental policy issue that I think requires people to change their mindset from a mindset where like a business holds the data and they can do whatever they want with it. And it's not the choice of the person whose data it actually is. I know we'll talk more about that, so I'm going to pause there because that's, I think, a core issue.
Great. And Sharon, let's go to you then, talking from the standpoint of WISE on why these issues and this data are so important for the benefit of your customers.
Yeah, sure. So at WISE, our mission's about helping people move money around the world. So if you need to make an international payment, we try to make it faster and cheaper, eventually free, that's what we hope, but also more convenient for people. And it's not convenient at the moment if you use your bank to send money around the world. Often it takes a long time, you don't really know what the fees are, and sometimes the money doesn't even arrive. So with that mission, getting it away from banks and giving customers more choice is one thing that we think open banking definitely helps with. So if you share that data or how customers are being charged, it gives them more information with which to choose what service they use. The other part of it is around connecting that data between apps. So I think the stat was 9 out of 10 people using fintech apps. That's incredible. So people are seeing their finances in multiple places and being able to look at that and compare that across those apps by connecting it. Again, open banking's a really good enabler for that. And then the final bit, which in the UK we're a bit more progressed on, is actually enabling payment initiation from these apps through open banking. So the ability to just essentially make a one-click payment, that's probably the dream, and make it a much more simple process to move money around. And if you've got a structure and a set of principles around how data can be moved around like that, and you've got some guidelines around who owns it and permissions, then it's just a much better environment for consumers generally. And we try to do that at WISE, and any kind of structure around open banking that supports that's a good thing for us and for consumers, most importantly.
So, Tom, you're the person of the hour here. I think when this panel was planned, correct me if I'm wrong, I don't think we knew that Director Chopra was going to be announcing a game plan for the 1033 rulemaking. I was in the audience at Money 2020 when he did so, and actually I was moderating the next panel on the topic. So tell us about the CFPB's game plan on this timeline, what we should expect.
Yeah, of course. Thanks for having me. I'm going to start with everyone's favorite part, which is the disclaimer, which is that I'm here representing the Bureau, but what I'm expressing are my own views and not necessarily the views of the Bureau. Although, as I like to say, I hope I'm close. So just to give everyone a sense of where we are in this process, the CFPB is subject to a statute called the Small Business Regulatory Enforcement Fairness Act, or SBREFA, which requires us, before we propose a rule that's going to have a significant impact on small businesses, to convene a panel of small businesses, obtain their feedback. We do that panel in conjunction with the SBA's Office of Advocacy and OIRA. And so the outline that we released a couple weeks ago is going to be the basis of that small business consultation. And to sort of give folks a sense of what's in there, you can think of the entities in the ecosystem sort of in two big groups. The first group is what we call data providers. Section 1033 of the Dodd-Frank Act refers generally to an obligation of covered persons to make data available. Those of you who are familiar with the Dodd-Frank Act know that the category of covered persons is incredibly large. And so we are not in this outline contemplating trying to cover the entire field of covered persons. Where we are starting is with certain consumer transaction accounts, primarily asset accounts under Regulation E, and credit card accounts under Regulation Z. And the proposals under consideration would contemplate a data provider having to make a secure portal available both for consumers to access that data directly themselves and for the consumer to authorize a third party to access the data for them. And that's where you sort of get the other bucket of entities in the ecosystem, the authorized third parties. And so in order to be an authorized third party under the proposals under consideration, the third party would have to make a certain set of certifications once they obtain the consumer's consent to obtain data on their behalf. Those certifications would include things like specifying the use for the data, making certifications that the third party is going to limit the collection, use, and retention of the data to that which is specifically needed to provide the service that the third party is actually providing to the consumer. And so, that's sort of at a very high level. We didn't get quite as long as the Treasury document, but our outline is a little over 70 pages long and goes into this in a lot more detail. But that at a very high level is where we are in the process, and we're looking forward to seeing the feedback from the small entities, seeing the feedback from other stakeholders, and continuing on this rulemaking process.
So first, I want to say how impressed I am by the way you say the words that SBREFA stands for. I know many regulators who can't. I won't take a poll of the room, but that was very impressive. Talk more about the motivation, including particularly, we know that Director Chopra and the CFPB have been putting a big priority on fostering competition and also obviously on consumer protection and privacy. Talk a little more about what you hope will come out of this step that you're taking.
Sure, so maybe we can start with the competition aspect of that. I think there's a couple of ways you can think about it. The first one is both sort of allowing for the development of new products and services and for the improvement of existing products and services. And so if you look at cash flow underwriting is a great example of a use case that is really facilitated by third-party consumer access, third-party data access. And there is research that suggests that cash flow underwriting may actually allow for more accurate underwriting and potentially underwriting that might mitigate potential concerns around fair lending and racial discrimination in the lending system. And so facilitating those kinds of use cases can be really helpful. It also ensures and it helps small companies get in the game so that small companies who don't already have access to a large pool of consumer data because they aren't a large financial institution with a big pool of consumer data can also have access to that data and really let consumers choose who they're going to get their products and services from, and they're not limited by where their data already is. And then related to that, I think we are looking at the possibility that this regime might also enhance the ability for consumers to switch providers and switch accounts. Being able to potentially bring part of your transaction history from one provider to another provider might make it a lot easier to switch. For example, if you wanted to switch a bank or switch another provider, it could be potentially done more seamlessly if you have the ability to sort of bring that data in an electronic format that your new provider can bring in sort of without some of those switching costs. And so hopefully by making it easier for providers to switch, for consumers to switch providers, it encourages better competition. It encourages companies competing really on who can provide the best product, and not just relying on the inertia and momentum of already being the provider to the consumer.
And one more question for you, Tom, before we broaden it out again. How are you consulting with other agencies as you work on this?
Sure. So Section 1033 already specifically directs the Bureau to consult with the federal banking regulators and the FTC. And we've been doing that. We've done that for quite some time, and we will continue to do that through the rulemaking process. Obviously, we're also consulting with the SBA Office of Advocacy and OIRA as part of the SBREFA process. In general, we certainly recognize that there are a lot of equities across this system and a lot of folks who have real interests in this rulemaking process. And so we've done that consultation. I think it's been really productive, and we're really looking forward to the ongoing engagement with our fellow regulators.
So let me ask both you, Meredith and Sharon, what you're hoping will come from this, and maybe what you're worried about as well. Meredith, you were the former general counsel of the CFPB, so you've got a double lens probably on this whole process. So start with you.
Well, first of all, I'm so excited that CFPB is now working on this. I mean, I remember when I was at CFPB years ago, and we were kind of working our way through the Dodd-Frank Act to figure out what to do. I always thought this was an area where there was so much promise for consumers. And so, there were some other problems to deal with first, but now we're here, which is exciting. I think there's probably three big things that I really, really appreciated in the outline. First is the focus on, affirming the consumer's right to access, because while that is in the Dodd-Frank Act in Section 1033, the CFPB has made very clear that that is not really in question. That is something that, is essential. And, I talked about earlier, the idea of a consumer-centric concept, that's never been said before. And so that's a very, very positive thing. The second thing is, sort of the concept of oversight. In order for this to work at all, there needs to be trust and security in the system, because the way the history has been is the banking system thought well, as long as it stays in the banking system, we can be trusted. Well, now we are talking about broadening that universe, and we need to make sure that trust and security expands to the rest of the universe. And so, for example, I know CFPB is thinking about how they would extend their own supervision authority, and I think those are really positive things because, while open banking, open finance is great for consumers, you need the regulators to be paying attention because there's all sorts of businesses out there. Hopefully most of them are great businesses, but sometimes they're not going to be, and that's what regulators really will help us with. And the third thing is this point about competition that Tom was just talking about. I mean, Tom made several great points about why it's important. I would just focus on one thing. Before there was competition, you didn't see a lot of innovation. People were kind of stuck with one provider. I mean, look, 15 years ago, there was no bank app that you can use like you can today to do things with your money. If you wanted to pay a bill, you used a check. If you wanted to do it quickly, you'd have to drive to the place and drop it off. So it's amazing how far we've come, and there's a lot more ahead. So I think the competition aspect is very, very significant.
And Sharon, add to this, and also you are bringing a perspective. You're based in the U.S., but you are with a British company and previously were in the UK, where there has been a lot of experience with open banking and the goal of more portability of accounts. which I think did not turn into a flood of people switching accounts, as I understand it. But share your perspective and, again, what you all are hoping will come from this process.
Yeah. I think the thing that didn't work so well in the UK was that not everybody signed up for it, and not everybody provided the data in a way that was accessible and made it easy to share. And the best way to solve that is to mandate it. And if regulation can help to force banks to do this, then that's a really good thing. And that will trickle through to many of the themes that that Meredith was mentioning. I think I totally agree with. I think they're the things that should come from this, which are consumers trusting the system and trusting that if they share their data, nothing bad will happen. In fact, actually something good probably would happen because they'll have more choice or more visibility of options. And then actually that ability to use those other options. So the example of people not switching their accounts in the UK, one of the other big reasons for that was that it's really hard to do it. So really hard to switch over from one bank to another, move all your direct debits or all your payments, look for all your history, like all of that stuff. Open banking didn't really help make that any easier. So making it trustworthy, but then making it low friction are the two really important outcomes. And then if we can do that, which probably will take a long time and is not a small challenge, the bit after that is actually using the system should be easier if there's a good open banking standard. So helping people to make payments quickly and easily, whether they're logged in on one or two apps, those sorts of things. So payment initiation, that's probably the gold standard that would come after those other things. But I think the trust bit is really important. You really can't go any further without that because customers won't use something if they don't trust it. And if they trust it, but they find it incredibly hard to use, again, it's very unlikely that they're going to move away from the default, which is the bank they got when they were 16 or 17 or when you first get your bank account.
We want to talk a bit about partnerships, bank fintech partnerships, and their role in the evolving ecosystem and how this issue may impact them. Including community banks and minority depository institutions, MDIs. And I'll offer my opinion that small banks are not going to be able to compete if they can't innovate and provide the kind of technology people want today. And I'll just put it out there, I think they can't innovate unless they partner with fintechs. For the most part, it's somewhat of an overstatement, but not usually. They're not going to be able to afford Google engineers and such to design their technology. So I think the consumer has a huge stake in these partnerships being able to flourish. At the same time, we know there's a lot of regulatory concern about partnerships, about whether the fintech partner is going to be accountable enough and compliant enough and so on. So for any of you, talk about how you see the impact on these partnerships and what you hope to see, what you're worried about maybe.
Yeah, I mean, I'd be happy to start. I think your point is totally well taken, Joanne. I agree. The largest institutions are able to afford whatever kind of technology they need. And we haven't talked about, sort of the shift to API-based access to data, but this is a good place to bring that in. In the past, data was gathered through other means, through screen scraping primarily, and in the last couple of years, it's really moved towards having an API-based way to access the data and collect the data, which provides more control over that. One of the challenges for the smaller institutions is they don't have the ability to build their own APIs. It's just too expensive. One of the things we've tried to do as a company that is one of those third parties that collects the data is make available technology that they can use, which is essentially an API that they can plug in to do it. So we're trying to make that work because we agree that's what the future is going to be about. And I think it's really important, though, that those small institutions and all of their customers not be forgotten in this process, because if the rule were too prescriptive about specific technology to be used and exactly how it's going to work, it might really shut out all of those small institutions. And, I said earlier, 8 in 10 Americans use fintech apps. That other 2 people, they probably would benefit from having the ability to have access to fintech apps as well. And so we don't want to shut that off too soon.
And I think I'd add to what Meredith said, all else equal, I think there's a consensus that we should be moving towards an API or some other secure data standard. But that doesn't just require a technological solution, it also requires, certain legal solutions. And what we've observed is, yes, are the largest financial institutions entering into those agreements? Sure, but there's a long tail, and that includes a lot of the community banks, minority depository institutions, and similar. And so one of our goals in this rulemaking is, by resolving a lot of the open questions that are currently being resolved through bilateral negotiations, through rulemaking, you take a lot of that sort of off the table, and it hopefully facilitates everybody getting on board in the ecosystem in a way that is safe and secure and hopefully minimizes transaction costs so that folks can focus on sort of the implementation piece that doesn't require the issues that we hope to cover during the rulemaking.
Yeah, sorry, I just want to add one other thing. Your question, in a way, was a little bit broader. It was about fintechs in general and concerns from the prudential regulators about sort of the safety of those institutions. I think it's dangerous to do a broad brush approach and say all good or all bad. I think that's part of the reason why it's so welcome that regulators are looking at this area right now, because there's going to be great actors and there's going to be some that are not so great. But ultimately, if consumers want this, and if this can be beneficial for consumers, either because ease or access or whatever other reason, then it's up to industry and regulators to solve the problem and provide it for them.
Yeah. I think so. The topic of the smaller banks is an interesting one. So that's something that we don't have so much in UK and Europe. It's much more fragmented here. And the role of partnerships there, I think, is probably actually really, really big. And we've partnered with a couple of credit unions, smaller ones here in the US, to help them with their international payments. So that's our business. We're not probably going to be the partner that solves for domestic payments for these smaller businesses, but we absolutely want to make our service available to as many customers as possible. And we wouldn't discriminate based on you being a big bank or a smaller bank. And we've proven that by integrating with these smaller credit unions already. So that's an interesting one. I think the role there on the fintech is to make their ability to integrate as easy as possible and take away or give those smaller organisations an option to sort of outsource stuff that they can't afford to build for themselves. The role of open banking there, if it went down the route of mandating very strictly what those smaller organisations had to build, that would probably be quite concerning for them because they don't have the ability to build that sort of stuff themselves. So how you include partners in that legislation, so having the ability for a smaller credit union, for example, to leverage a partner to meet those requirements would be maybe one way to think about it. But it's an interesting topic. I mean, the nature of open banking, I think, is about enabling people or not shutting them out of a system. And if you didn't enable smaller banks or institutions through doing it, then it would feel like it had failed. But it's an interesting challenge. It's not. I'm not sure what the answer is, but I think any legislation that comes through should acknowledge that, and it certainly shouldn't work against that because that just feels wrong.
Tom will figure out all the answers. Is that right? This is such an important topic, and I know that Rodney Hood will be the next speaker and talk about the credit union component of this challenge. And if I can put in a plug for it, my organization, AIR, is holding a conference on November 30th on minority depository institutions and digitization and how to make them competitive, working on these issues with the National Bankers Association and Inclusive and other partners. Meredith, back to you. You've already talked to the large themes that are in play here, but distill for us again the main things that you really think need to get right in this process in order to benefit the consumer to the maximum degree.
Well, I mean, I keep going back to the consumer. Not surprisingly, my history has been doing a lot of consumer protection work in the past, including at the CFPB. And so I think trying to think about what the consumer's needs are, which is safety, security, but also the innovation and access, are the critical things. And that clearly should be the starting point, I think, for the CFPB. One of the challenges that I know that they're grappling with is what do you do about privacy and control of data once it leaves the consumer, either to go to their bank or to go to the fintech or to go to whatever other company it is. And I think that we don't really have a national consensus yet on sort of how to treat data, but I think that there's room for that. And it's really important that that kind of regulation be nuanced, because it's so easy to be like super, super protective. You've achieved protection, but you've failed in the space of allowing innovation or improving the experience or the ease for the consumer. And so one of the things that we've been talking about at my company is, what do you do about secondary uses of data? And we've kind of come around to think about this as, when a consumer wants to have a service or use a product, they're consenting to a certain, bunch of uses for their data to make that possible. And for that, you need to give notice, you need consent, under the typical standards that exist. But, you can start to think about things that go beyond that and think about opening up consumer consent and giving notice in new ways when you're getting beyond that. And that's not something that we've agreed to yet as a society. There's not a law that requires that, but it's probably a direction that things are going to have to go.
I will offer my 2 cents that I think we need to develop a whole new model of consumer protection and disclosure, because our traditional disclose and consent model, how do I say it nicely? It doesn't work all the time. Sharon, let me come back to you for a minute. You talked earlier about the differences between the US and the UK in terms of open banking. Help us look more broadly at the context of privacy protection and data use and data rights. The US has definitely done much less in this area legislatively and from a regulatory standpoint than most other parts of the world, really, and certainly the UK and Europe. And when we begin working in these issues, we tend to define them as financial because we're in the financial space, but they're way bigger than finance. What lessons are you seeing from GDPR and the other things that have happened, PSD2 and so on, that might benefit this discussion?
Yeah, I think one of the really good things about GDPR is just the awareness that it's brought to consumers. It was a huge topic. So, anyone working in any industry that involves data would have known about it, but customers also, because it was such a headline news story. And that's a good thing. So, having it as a debate and having it as a topic that's on the agenda is a really good thing. But then the implementation of it is quite different. And this was not something that had ever happened before. So it came in and there were no GDPR experts because it was a new thing. And so the implementation of it was really variable. And my experience as a UK person is now every website I go on, I read this huge bit of text and then click a button that says, yes, I want to keep going. Yeah. And I don't read the text. And arguably that's not really solving the problem that it sets out to solve. So finding some balance between that and complete free-for-all, Wild West, whatever, is probably where to go. And if people can learn from what the GDPR implementation looked like, and there are now experts, right? There's people who've worked on this for a number of years and probably do have a better opinion now on what we should do than when we were actually trying to roll it out. And one thing I think we really didn't do well is the customer experience part of it. So my example of, I don't read the small print and before I click the button, but also when you're trying to use some of these, using the Fintech example, because we're talking about Fintech, it can make your product much harder to use if you don't instantly give that access to the data. So if you want to send some money to a friend, if you use Venmo, you need to give permission to find those friends. And finding a way to balance that without doing something bad with that data or taking people's choice away is probably the bit to focus on, in my opinion. There's obviously bad actors who take data and do really bad things with it, and that's probably a different solution to the everyday one. It's try and keep out the bad people who are really going to exploit people's data. That's one set of tools, and then the other one is how do you actually enable people to use things in a usable way by sharing their data, because people want to do that. I want to do that. Like, I know the risk of sharing my data, but I still don't want to click 20 times before I send some money to somebody on an app. So.
We only have a few seconds left. Tom, why don't we give you the last word? What would you like everyone to take away from this session?
The first thing I'd like everyone to take away is please go on our website, download the Sabrifa outline, read it. There's a high-level summary we provide to try to distill it down to the key stuff. We have a public email inbox for people to provide feedback. We want that feedback. We want that stakeholder engagement. Frankly, we need that feedback and stakeholder engagement. And the last thing I'll say is, Joanne, you said something about me figuring this out. There is an incredible team of lawyers and market experts and economists on our rulemaking team,
and technology people.
And technology people, yes. And I'm just very proud to represent them all, and I'm really building on their work. They're doing the hard stuff. I just get to sit here and tell you all about it.
Thank you. Join me in thanking the panel.